The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And it is a wonderful day at the headquarters of Technical Trading and Investing, TFNN.com, with your always humble and lovable and squeezably soft host, David White. We always come to you between 5 days a week between 2 and 3 Eastern Time. Today, one of the rare occasions where the market's down. We're off almost 10 points on the S&P cash, 2.5 billion shares on the consolidated tape. And that tells us that there's actually finally a little bit of movement out here in the markets today. We've been bound to 1538 on the S&P cash. We're at 1542. We've had a couple attempts to pop every time something bad comes out of Cyprus. And there's probably a lot of bad odors, I think. Those people don't look like they take a lot of showers. I don't know why. You'd think it look like they have lots of water, but I don't know. Maybe it's just those pictures, but they all look kind of hot and sweaty. I thought the weather would be a little bit more inclement this time of year, but maybe they just look like that all the time. But anyway, the continued assault on the bank accounts of the people of Cyprus. Yeah, Cyprus. I guess they're Cypriots is what they're called. Cyprus is where they're from. Anyway, you get a little bit farther into the nuts and bolts of this whole thing. 60% of the money that's in the Cypriot banks is from overseas. About 40% of that is from Russia. Almost everybody in Russia hides their money there. Only about a 10% tax rate for corporate taxes. The idea is to go ahead and raid that money. I still have a feeling that a lot of those Russians, if they actually get any money taken out of their account, probably going to be sending down a lot of people to do some headhunting for the politicians. But just my thought out there. They don't cotton too well to people taking their money. Probably about the equivalent of taking a drug cartel in South America's money. I just don't think it's in your best interest to do so. But we'll see how this plays out. The market was actually doing fairly well. The news that they would not vote today came out in the market, just a little bit before noon. Market started rocketing down fairly fast. It has hit lows. The volume pretty much is going to project out to about 4.2 billion shares today. So we're going to have a little bit of volume, at least better volume than we've had over the last few weeks on the downside. 10 points is not all that. Of course, we are in the midst of a Fed meeting. That Fed meeting is going to break early tomorrow at 1 o'clock, have an announcement, then have a question and answer period. And at the end of that, I suspect Bernanke will turn his fire hose of money on the rest of the market, and we'll probably get somewhat of a recovery. That recovery would probably be the best time to take a look at placing positions, and that is either going to be long or short. I suspect that we'll have a fairly decent signal by the close tomorrow on whether or not we are going to break out. We've basically 2 points shy of the all-time high in the S&P. And is that enough if this thing turns south? Yeah. Enough for me to put in a high. I would really love for it to have an intraday spike tomorrow and go through 1556 for about 2 seconds and then retreat one more time. And, we can really get that on FOMC days. So not too much to actually be yelling and screaming about. I was looking at stocks moving. Not a whole lot going on out here. Today in history, in an attempt to lift the state out of the great hard times of the Great Depression, Nevada State Legislature votes to legalize gambling. That was 1931. And the first legalized gambling in the United States in Clark County, Las Vegas, but what can you say? It's about in the middle of nowhere, and I think there were 150 people in Clark County at that time in 1931. Probably no more than 10,000 people in all of Nevada, probably back in those days. It was dry and dusty, and there was no water. Probably not a big place to be hanging out. Actually only became a big hot stop in the Second World War as a waypoint for the military going back and forth. As they stopped off, they found that they could go gambling there. And a lot of guys thinking it may be their last day on Earth or close to their last day on Earth were willing to throw caution to the wind. Of course, after the war, in the early 50s, really started building up. But we'll take a look at that. Any other news out here of interest? Probably not a lot. Pretty quiet day other than the move in it. We're going to look at charts here fairly early. But there's a few stocks out there moving, none significantly. Probably the biggest thing today is the advancing and declining issues as we speak. Advancing issues on the New York Stock Exchange, 28%, 69% declining, unchanged, about 3%. So a pretty good indication that there is broad-based selling today. The volume is picking up. The last few minutes of the day seemed like yesterday, seemed to brought in some sellers. We're going to see a few more of those today, and we have to see what that entails. Let's see if we had anything else going on in here. Gold is up today again. Closing prices for COMEX. Gold rose $7.20 to $16.11 an ounce, almost $16.12 an ounce. I suspect we're probably going to get one more pop, and that might be tomorrow, and we'd really want to be watching gold at that time to see whether or not this thing's going to bust back in to a trading range between 1,600 and 1,800, or if this is the last little pop and this thing's going to start rolling over. May silver fell just a penny to 28.87. And probably everybody else is looking at copper. Copper is falling out of bed. It is unclear that the build in copper is on a lot of people mining it or the lack of use, and that debate is going on. What it did do is fall 3 cents to $3.40 today. And basically it's 7-month lows. So we continue to see copper kind of put a pale over at least a global economy breakout. But we'll have to see over the next couple of days. I think a lot of this is Fed related. We get a lot of stuff. We also have today and yesterday being options rollover. It's not uncommon to see a lot of movement. The question is whether we would have had this movement with or without Cyprus. And my guess is we probably would have. What we really want to be watching over this next couple of days is probably stocks like Apple. Has it bottomed? I wouldn't be in it, but, it's one of those stocks that I think a lot of people think that they should trade. Has it got 470 in it? Probably a good idea. I would need to get somewhere around $500 in it and out of it, and I think maybe it may be done going down. The question is how long are you going to have to hang on it for it to go back up? There's a lot of overhead resistance in it. Could be a decent trade in it, but I don't know. No, it just seems that there are better stocks out there that are moving now. But probably a good indication, if I feel like that maybe Apple would be a great trade. It is pulling back today. What do we get on this? Let me update. Again, just because you make a bottom doesn't mean you're going up, but it does mean that it's off $4 today. No big deal. 451.71. It got up to 460.95 this morning. That resistance level is probably really going to come in about 470. If it can break 470, then you probably will see 496, 498, maybe $500 in that, and that's where I would probably look about potentially reshorting Apple. When Samsung comes out with their new flexible displays and their unbreakable displays, if they can actually deliver, I suspect that will be the end of Apple's even argued domination of the smartphone market. Google, this thing's playing around at 808 right now. Not getting a lot on that. Pretty much flat for today. Facebook off 16 cents, 26.33. Microsoft off 3 cents. Intel off 19 cents. A lot of these stocks, to me, look like they would be decent plays, but we need to get a retracement in them to make sure that we have a nice and supportable bottom. What else do we have out here? A few stocks that we've been shorting finally are starting to crack out here. Actually, we'll know today on what's happening on here. VIX is up, and it's up at 15, which is still relatively low. 1505 is the last quote I have on the VIX. And I think we're going to continue to see that start picking up and it's some decent volatility. Let's see what I have out here. Just looking at it. Yeah, off 9 points on the S&P cash now. We continue seeing volume's light, I guess, since the beginning of the show. We're going to get into charts here fairly quick, so let me go ahead and bring those up and see. Wanted to look at Apple here to see if we can pick up any clues, being still a huge percentage of the NASDAQ. And you can see by looking at the chart, we do have kind of a small pop-up in this thing. You've got that huge gap down. So you start seeing that at 484. That top of that is, I think, 496. And that's where I suspect that you're going to have miserably hard and radically hard resistance. But this thing may take a little while to get back up in there. You did test the bottom with lighter volume. My question is whether or not it's worth making a play on this to go above 484. I think that would just be a natural consolidation range in that range. If it gets that, it's probably going to, for about half a second, try to go up there, that 496. And that's where I may be looking to re-short this again. Amazon has continued to slightly weaken after the downgrades last week. It's not doing enough out here. Volume is fairly light. This thing has come back today into the gap, and that gap actually happened on the 2nd of January with the fiscal cliff announcement. So we're finally getting back into there. Volume was not all that exciting in this one, and I think it had to do a lot more with a lot of people wanting to get out of this and push it a little bit higher. I am not bullish on Amazon in every sector of their business. People are coming out after them. Today, the move down comes on a little bit more discussion on exactly how much it's costing them for content for the streaming media services as they go up against Netflix. Again, not a lot of volume, so we may get one more bounce out of this. We'll be back in a minute.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
We've had some stocks that have been topping out here. We're looking at Precision Castparts Corporation in the charts right now. Last high was January 14th. And you saw 194.95 with 1.4 million shares. Got into that yesterday with basically 750,000 shares. So almost 50% of the volume. Not a big surprise to see this pulling it back a little bit, but not a lot of volume so far today. So we're going to have to look at some of these and see whether they're moving along. Timken Company, TKR, and it is another one making a relatively decent high out here. Last one was on April 27th of 2012, $57.94, 1.4 million shares. We got into that a few days ago with basically, 700,000 shares. So less than half. This one's pulled back in its trading range. So we're not seeing a lot of stocks really break out with all that kind of huge volume. We want to look today at some of the stocks that have broken out. I was a little wary about International Business Machines. This thing did break out with lots of volume, but it is pulling right back. What you want to be watching for this is a close back in the 211.79 cent high. And probably won't be shorting this one, but I was suspecting that there may be a short-term high in IBM at these levels. When we look at other stocks, they are not all. A lot of them are kind of acting like they're ready to pull back a little bit when we looked at Google and some of these others. Even the bounce on Apple, fairly weak right now. What we're looking for to confirm a top in Google is probably a close below that 774.38 high on October 5th of 2012. We did kind of break out. Not a bad looking chart in Google. I really don't like the energy in this last run out here. And I really dislike this nice gap from 705 to 738. I'm thinking that it's probably going to get actually filled, and then maybe that's the next time that we could look at actually buying it. Timken, when we looked at it, manufacturers, engineers, mechanical components, and high-performance steel products worldwide. So we're starting to see a little bit of that weakness on all that. Verizon Communications, very interesting high out here last couple of days. The last major high was the October 1st high of last year, 48.77 with 280,000 shares. Is that right? 280? Or 28 million, excuse me. 28 million shares. We got into it for 14 million shares on March 18th yesterday. It has gone above it. A close below that 48.77 would be confirmation of a top back in this. Is the energy up fairly decent in Verizon? Yes, it is. But still probably not enough to break it out of these trading ranges right now without a lot of good news. And, of course, a lot of these could break out tomorrow and see a little bit more in it. Housing markets red hot. Very interesting that we're seeing Waters Corporation, big manufacturer of the plumbing supplies, out at its previous highs. Volume has been a little light so far, but it hasn't really broken that previous high significantly. Went through it for a couple of days. What it is not doing is significantly pulled out. And on the downside, I continue to watch Weight Watchers out here and see how it's doing. I'm trying to remember the one. Oh, it was Chesapeake that we were looking at yesterday in my notes. I wanted to look at that. Let's see, tests. What is it? CPQ, CQP, that's Cheniere. Maybe somebody in the den has Chesapeake, or I can look it up here real quick. I wanted to look at it because I know Chesapeake, CHK. When we're looking at this, off a little bit today, one of the ones that's actually moving and was moving before the news actually did come out. Volume has not increased on this, but it kind of looks like maybe it's ready to start its 50% pullback into this market. I guess we've got a few seconds left. You can give me a call at 877-927-6648. That's 877-927-6648. And we'd be glad to have your call. It is going to probably be quiet here until the last 30 minutes of trading. We've had a little bit of a bounce during the show out here, but nothing really to write home about. Let's see what we have here. Just update it 1 second. Yeah, a couple of point bounce.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, as always, you can call me at 877-927-6648. That's 877-927-6648. We'd love to have your phone call today. It's going to be kind of quiet here for a little while. Market's picking up a few points that it had lost, but still fairly quiet. Update it here and just take a quick look at volume. See, 2.7 billion shares. So I think we're coming in on a 4.2 billion share day. So not too much exciting out here. And yeah, we're off to 6 points now. And maybe there's some news out there on Cyprus. I just right now with options rollover and the Fed announcements, I suspect that our next real inflection point that's going to last more than an hour or two is probably going to be after the discussions and interviews of Bernanke after the announcement tomorrow at 1. So probably sometime during the show. I think the Q&A is at 2:30 if I remember right. It's going to be interesting. We were talking about Harley-Davidson yesterday and about the very high volume push this thing. Pretty decent reversal today in Harley-Davidson. It had been attacking the May 1st high of last year at $54.32, 2.8 million shares. You had an attempt to try to get into that and it went to about 30 cents over on January 29th and instantly reversed on massive volume, which is a little bit problematic. We went back through it again, this time 2 days ago, or on Friday. All you got was 1.6 million shares on the 15th, and basically it closed below that was somewhat problematic. One of the reasons that we are seeing that the car business pick back up is a push, mostly from the Fed, government officials, to get back in subprime loans. And that's probably the reason we had the problem before. But I don't know, maybe it's just me, but doing the same things that got you in trouble in the first place seem a little problematic in the second to do them yet again. And maybe we just can't learn, or maybe the politicians can't just leave well alone. But probably giving loans to people that don't deserve it, problematic. But nonetheless, Harley-Davidson off fairly strongly today. Volume's not all that bad, but I suspect what we're looking for is a lot better signal by the close in the marketplace. Skull, S-K-U-L, when this first came out as an IPO, or probably within a couple months, someone called and asked me what I thought of it, and I thought, there's just, when you look at other brands in this sector, like Beats by Dr. Dre and a lot of these other companies, they are hitching their wagon to somewhat less or dubious musically talented folk in the rap arena. And a lot of it is just how much glitter and bedazzles and gold you can throw on something. I think the quality is probably good of the products, but to me, I know that the best headphones are probably going to be AKGs or Stenhausers or something else. They're not going to be Dr. Dre's Beats. But it is a what do they call it? The technical term, conspicuous consumption, and that's part of it. This thing has been doing horribly since it came out. I didn't think it had any chance, like a lot of these other companies. Well, the CEO has been booted, so it got a little bit of a bounce out of here. But I'm going to have to see some kind of really change in the marketing idea of what Skull Candy's doing. Just putting little skulls on the end of your earbuds just doesn't do a lot for me when there's 20 other people that are doing the exact same thing. And, there is a reason why Dr. Dre's Beats are doing that well, and that is that they get all those people that are basically shooting at each other on the streets of Las Vegas most of the time, two-pack becoming one-pack, and all the other stuff. It's a business that you're selling to. It will be fleeting as the apparel industry. And right now, Skull Candy was one of those stocks that got pushed out, had huge amounts of stock in the background that needed to be pushed out to the public. And I suspect if we looked at it very hard, probably find more and more of that out there. We talked about copper being very weak from just the supply side of that. It has had a decent bounce off these lows. And in fact, you got exactly what you're looking for. Huge volume gap down, goes sideways, it gets below it, actually gets very close to testing the previous low, but had not. The December 6th low is still open at $30.54. The day before you had 84 million shares. So I always put those together. If it's within a 0.5%, I use that 0.5%, the highest volume, either at the highs or the lows. So I'm looking for 84 million shares at $30.54 or less to test this out. That we came within about 18 cents of that on March 4th. It was nice. You're going to get pretty much an automatic bounce out of this, but normally you're going to get at least one more test of these high volume lows and push into them, and I suspect that's what we're setting up on Freeport-McMoRan right now and FCX. We're seeing crude and probably gold setting up for one more reversal, and that's probably on the strength of the dollar. When we look at it, Dollar index is up another 28 cents today, $83.18. I suspect we're going into that $84 range and then the $88 range. We'll continue looking at that. Market has been improving a little bit over the last 10 minutes, 15 minutes. So what do we got here now? 15:45. What can you say? Could we bounce 20 points into the FOMC meeting tomorrow? I think it's possible. I'd certainly like it, and I'd like to get a good and clear signal by testing that 1556 on the, or excuse me, 1565 on the S&P cash, and I think we could probably do that tomorrow. You get enough volatility out of this market, and we've had a fairly decent pushback today, and the volume's not going to be, at least so far, that would make me think that we wouldn't get one more test. Volume has been too light to break out these highs, but we're closing on 2.8 billion shares now. We looked at HOG, we looked at FCX. I wanted to look at the SMHs today. SMH. And we've been watching this. We talked about this on the show, about it hitting its previous high and going over by a penny last week. This thing has given fairly decent signals as far as price and volume over the last year or so. SMH is the Semiconductor Holders Trust, and we'll get into it in just a second. But what we'd been looking at was the March 27th high of 2012, 36.17.9. What's that? 900,000 shares. You got into it with 640,000 shares. Nice little doji and an immediate pullback. But you went over by a penny. You closed basically below that, and volume started coming in the next day. I am flat in my newsletter for technology. This is one of the reasons why, even in the push back in the semiconductors, the move up has been weak. Normally, that means you're going to get at least one pullback. I suspect that we could rocket back into that $32.50 to $33 level on the SMHs with no problem, and we're probably we're halfway there already as we look at it. Some of the other companies moving. Let's go ahead and look at the advancers and decliners. Let's see what we have here. Stock market news. I guess that's why we got our movement. No way, Cyprus Parliament rejects bank deposit tax. So everybody may be feeling a little bit better about that. No one really has. Yeah, okay. So we did get that news. It's always one of the things of working on the live wire and actually trying to react to news, why the show goes along. But while we got our little pop out there, but what I wanted to look at, we looked at Chesapeake, that. Let's go ahead and look at some other stocks in the Gartley fame. Again, let's see, do Gartley's, and we'll come up with one. Axiom, ACXM, looks like it's setting up a bearish butterfly. Probably would like to see a little bit more between the X and B points for time frame, but this kind of action is not uncommon out here. You have a target at $19.72, so we're basically, 6 cents away from that target. Probably see it in the next day or so. ACMX would be one of those. FTK, which is Flowtech Industries. I think this is a longer one, isn't it? Yeah, very long. Flowtech Industries. This one's another bearish butterfly setting up, and probably one of the better looking ones out here. Of course, probably not as expensive enough to go short it, but it's setting up for a target of $16.44. Maybe seeing this in the next day or two, but energy on this last leg up has been fairly extensive. It also showed a lot more weakness than a lot of times you would like to see in the pullback in the B2C leg, basically retracing 84% of that move. And I suspect your target would be somewhere in that $9 range if the thing continues to fail. And What I dislike about it also is the original X point that started the whole Gartley pattern was the May 3rd high of 2012, which you had 2 million shares. You wanted to see a big move with 2 million shares, and you kind of did. You had 3 million shares, so you got your breakout on high volume, but the rest of it, other than the one breakout, has not been all that exciting, and may be a signal of just a short interest, or just a pullback to the 1473, and then at that point you might get some consolidation, and then maybe you might be able to buy the thing. What we have, Sunoco Products, another one of these I've been watching. It is making a nice little doji out here today at the very high end of a Gartley pattern. Again, a little bit bigger retracement, but no test of the low in the C point of this particular Gartley. The X point started on March 9th of last year, and you've got $34.83 with 470,000 shares. But you tested it with just slightly lighter volume on the November 16th low. But your back is to the wall on Sunoco Products, S-O-N. And what could you say? The energy on this last leg up, a little lighter, but not enough for me to pull the trigger short. But maybe in a bigger trading range from 34 and a half, somewhere in that, back to the $29 level in Sunoco Products. Let's go back and look at some of the other ones that had been out here. Was looking at AutoZone also. Let me go back here. This one's been banging away, and I think we're probably going to be watching this fairly strongly tomorrow after the FOMC meeting. I suspect this thing wants to get back up to the 399.19 high that we saw on April 30th of last year, and you basically have 250,000 shares that day. It is a $400 stock. AutoZone, probably going to tell you a lot more. We've had a little stronger volume up to this 392 level, so we're only about $7 short of hitting that high. A little bit of a pullback today, but I suspect we're probably going to get a very clear signal in this tomorrow afternoon, and some of those. Some of the other stocks that have been bouncing on short covering Bed Bath & Beyond. Still a little ways for this thing to run. It wants to get up into the high 64s and start trying to at least fill this gap. And there you might want to look at another shot at shorting this. It came down on monstrously high volume, and that was on 14.6 million shares on September 20th. We have yet to come back and really start to fill that gap, but that starts at about 64, 64.50 back in there, and I think maybe we might be able to see some pops in some of these stocks that have high short interest. What are the other ones we wanted to look at? Avago, which is the one of the suppliers to Apple. We've seen these lower lows and lower highs, and this one is making a huge pattern in what is known as an asymmetrical triangle. If you just started drawing lines from the December 19th low of 2011 and the big high from March 30th, 2012, just put a big greater than sign on this thing. It's getting awful close to getting out to the apex of that. And normally you get a counter move and then a huge move the other way. So it's going to be kind of interesting to see which way this moves. AVGO. Be back in a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
The other thing we're probably going to be watching tomorrow is Oracle. Earnings out after the bell tomorrow night. And Wall Street is looking for 66 cents earnings per share and $9.38 billion in revenue. This thing has come up with high volume. Oracle could look like it could break out on fairly decent news. Just needs 24 million shares, and certainly had that over the last few days. 56 million? Is that right? Yeah, 56 million shares at the high. So you're probably going to get at least a test on that. So that's one more thing we need to be looking at. It'll probably give us an idea of how Europe is doing, since they do a lot of business in Europe. And what else do we have going on out here? Oh, wanted to play something a little bit for you. Now that we have all this stuff hooked up.
Breaking the law, 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 breaking the law.
Now that I have my update themes ready to go, out here. Some people may have seen the news article today about 10 a.m. this morning. Several individuals, I guess 2 of them, were arrested down here in Florida. Seems like a lot of stock scams originate down in Florida. And I think this one was in Broward County, although I can't find the article now. Saw it earlier today and a little bit on TV. The scam was a Ponzi scheme, and it was on these IPOs breaking out to much higher prices. This gentleman, another gentleman, a guy in New York, were all involved, but they were basically betting on all these IPOs bouncing the first day of coming out. And when they started bouncing out, they went back from LinkedIn and some of these other ones and never owned any of the shares themselves. They said that they had a special access to it. You can only get IPOs from your broker-dealer or directly from the company themselves, although that is getting somewhat problematic. And there's another way of getting them called second market. And this is starting to get a little bit cloudy, and that's why these people were able to get away with the scam. In that they said that they had bought additional shares or shares before the company went public in the private market in the second market. But they had never bought any of these shares. It was a big scam. They were out hauling them out, doing the perp walk before. I know most people that have gotten some money are a little wary of it, but still is a issue. If it's too good to be true, it probably is. The only place I've ever been able to get IPO shares are from a broker-dealer, and normally if you want to get them, they're not worth having. We did play one last month, but it's been a long time since I wanted any of these shares. Almost all of them universally now are doing these sliver deals where anywhere from 50% or less of the shares are actually ever traded, and later on through lockup and just continual selling to the public, the idea is to push these shares out on people over time. And of course, the bigger the shares, the lower the demand, because of course there are more out there. And most of the IPOs we saw over the last year, I'd say 90-95% of them are lower than their IPO prices. That is not uncommon. I've been lucky enough to catch a couple of these things that had super moves, but just remember, it is if it's probably too good to be true, it probably is. Especially in the finance market, people go after people that are greedy. Just be careful out there, and remember, if you're not getting it from a broker-dealer, it's probably a little suspect to begin with. Anyway, you can always catch me between 2 and 3 on Channel 14 on Tiger TV.